Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined by Dan, Nicole and Paul. And of course, this week, another new Prime Minister in the UK. Dan, over to you. What's your sort of stories of the week?
Yes, well, I mean, it's great to not be talking so much about politics, although, as you say, it's our third Tory party leader since July. But interesting from a real estate side, in his summer leadership bid, Sunak claimed that he was going to scrap the government's 300,000 homes a year target and block Greenbelt development. So it's going to be interesting to see how his leadership impacts on real estate. Elsewhere globally, economically, on Friday, Amazon released some figures that hit their share price quite significantly. And actually part of the reason for that was a lower than expected forecast for the festive season, but also, dare we say it, people beginning to return to shop in the high streets. So a positive sign for bricks and mortar retail there. Elsewhere on the headlines from the front page of City AM on Friday and in the Times, Ardent Companies in the UK, that's the subsidiary of the Ardent Companies based in Atlanta in the US, they've completed on that acquisition of the retail element of the Royal Exchange. And they've bought that from Oxford Properties, but an iconic building right in the middle of the City of London between Threadneedle Street and Cornhill opposite the Bank of England. Luxury retail, 51,000 square feet of space, got brands in it like Tiffany's, Hermes, Bremont, Fortnum & Mason, and it kind of adds on to Ardent's retail portfolio following their purchase of Touchwood in Solihull in May last year. And since its UK launch in 2021, Ardent's built up an industrial portfolio of more than 2.25 million square feet. So marching forward for Ardent in the UK. Elsewhere, we've been looking at a new science development that's been proposed in Cambridge. Mission Street, they're the mixed-use property developer building up the UK knowledge economy. Together with Bentle Greenoak, they plan a new science district in a wave of development in that sector for them. The whole sector is still attracting billions of pounds of investment despite economic turmoil. The leading developer at Mission Street, they're claiming that investment in the sector is more logical than other types of real estate. So I think that's one to watch. And last couple of stories in retail, Gymshark. I know, Richard, you noted Gymshark very early on in the Realcast days, but the first bricks and mortar store for Gymshark opened on Saturday in London. And that's the health and fitness brand from Manchester. Originally, they had a stratospheric rise to fame, due to online sales and social media promotion. But they've finally taken the proper leap into, from online to offline. And it's really outdone itself with a 1,800 square meter store spread across 2 floors on Regent Street with the Crown Estate, of course. And on to the build-to-rent market. New research has revealed that the UK build-to-rent market could rise 5 times and be worth £170 billion by 2032, according to Savills with the BPF. The projection, undertaken also with build-to-rent specialist Get Living and M&G, they think that by 2032, 8% of UK homes for rent would be purpose-built, and that's up from 1.5% today. This really does show that build-to-rent is one of the biggest growth markets in real estate.
Yeah, interesting to see that research from Savills. I also saw that there was a 500 million bond issue to bridge the gap in London social housing for green and modular house builder Zero Watt Homes International. So really interesting to see some of that social impact as well coming through in terms of the positive view on build to rent. Paul, and there's been more research in the market as well.
Yes, well, again, from Savills, the turmoil in European economies was bound to have an effect, and there have been a number of Q3 reports where we picked up on Savills, which projects that the European investment volumes for the year are expected to total between 275 billion and 280 billion, and that's according to their preliminary third quarter figures. The firm said the Q3 total would be about 55 billion, bringing the total for the first 3 quarters to slightly over 200 billion, and that's a 10 to 11% drop compared to the same period last year. Well, it's too early for country by country figures. Savills said the lull is spread across the European region. The surge in inflation caused central banks to raise rates to historically high levels, making the gap between bond and real estate yields increasingly unfavourable to real estate. In September, the spread between real estate and long-term bond yields dropped to 44 basis points from the average of the last 10 years, which was 279 basis points. Further gloomy news from Drooms. According to the Real Estate Transaction Barometer 2022, which the Proptech firm produces, the length of time taken to carry out a commercial property transaction from bidding to completion has drastically increased. In 2019, it took 165 days. By the first half of 2022, this figure was 258 days, and that's a rise of 58%. The transaction length went up exponentially by 33% between 2019 and 2020, Drooms pointed out. Part of this is because of the economy, Drooms says, also the coronavirus pandemic. But the firm says actually the increasing number of regulations, for example, in the ESG area, is another reason. But Savills also reminded us that the sheds and beds sectors remain the sectors of choice because of the respective structural supply-demand imbalances which favour rental growth. Deals news of late seems to support that. Notable examples in the last week included BNP Paribas Real Estate Investment Management Germany's acquisition of an 11,000 square metre student accommodation and university research facility in Leipzig. On the logistics side, Lidl France has acquired a 50,000 square metre logistics project in Béziers in the south of France. From Bearings, but it's actually part of a network of logistics buildings that Lidl's opening in France at the moment. So underlying that, the convenience grocery sector seems to be thriving too.
And I noticed as well, Panettone set to build an industrial park near Katowice airport. So still lots of focus on the logistics side. Nicole, what have you been tracking?
Well, I've been looking more at the offices in Italy. Coima had their market update, and it says the Italian real estate market continues to attract considerable investment, both domestic and foreign. And transaction volumes will increase to over 11 billion euros this year, which is up from 10 billion euros last year. And 73% of this is foreign capital. But offices have been the most popular, attracting nearly 4 billion euros already in the first 9 months of the year, followed by logistics and hotels. The office market in Italy, like in other countries, becoming more polarized. The overall vacancy rate in Milan, which is obviously the main business city, is above 10%, but it drops to 0 in new developments, which are ESG compliant and grade A, like Porta Nuova, which is the flagship Coima development. And in fact, Porta Nuova this week was the first urban regeneration project in the world to receive both the LEED and the Well for Community certification. So that's quite a landmark. And the Qatar Investment Authority, which owns Porta Nuova, is sort of Coima's partner in Italy. They've invested over 5 billion euros in Italian real estate so far. And the chief executive said this week that they intend to invest more, and then especially in offices and hotels. And there were figures out from JLL as well, which confirmed Coima's figures: 4 billion euros invested in offices in the first 3 quarters of 2022, so 95% growth on last year, and Milan accounting, no surprise, for about 70%. JLL said a very strong leasing market, a 40% increase in leases signed in the first 9 months. So sort of they called it a return to normal after the pandemic. And as I was mentioning, international tourists are back, and the hotel sector in the first 9 months of the year has gone up to 1.1 billion in transactions. It is the third sector after offices and logistics, and it's expected to increase further this year. The Rosewood Group, the luxury hotel group, has announced it's opening a new luxury hotel in Milan in 2025 in a beautiful historic palace right in the center of the city next to the sort of fashion area. And it's the 4th hotel in Italy for the Rosewood Group after Rome, Venice, and Tuscany. And the CEO, Sonia Cheng, said that the group continues to grow in Europe, but particularly has its sights set on Italy, which says it's a market that ticks all the boxes for us.
Yeah, interesting to see that focus on Italy, and actually a lot of discussion around Italy at Expo Real. And another story that came through loud and clear for us at Expo Real, and it is now being reflected, is I noticed a story from the US with CBRE to lay off workers amid a 400 million cost reduction plan. And that was CBRE CEO Bob Salentic saying in a statement, there is a definite identifiable pipeline of projects across property types that want to be sold by the owners. And there's a lot of capital out there that wants to buy, and neither of them thinks this is the right time to transact. And that definitely reflects a lot of the discussions we were having at Expo Real. And as well, I noticed in news as well that Credit Suisse are looking to cut 9,000 jobs and seek billions in new investment. So maybe beginning to see some of the effects now coming into the market. Thank you, Dan. Thank you, Nicole. Thank you, Paul. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.